Hi there, welcome to Nepi Invest. In my previous video released on December 20, I did a video on two companies that released positive trading updates or profit upgrades. And we saw a positive reaction from the market in regards to those announcements. Today, well, actually, it was on the 20th of December, we saw three companies do the complete opposite. They released negative trading updates to the market, and we have seen a negative reaction from the market. Although one company didn't release, well, they did release a trading update, but their shares had been suspended for trade or from trading for about 4 months because of irregularities in their financial statements, not only for financial year 22, but also previous years. And finally, they have rectified those irregularities. I think they overstated their profit. They've released their updated financial statements. They've also issued a trading update, and the market absolutely punished that company with the share price down over 50%. So before we have a look at that company, let's have a look at the other two companies that did release negative trading updates on the 20th of December, 2022. The first company that released a negative trading update is Domain. And this might make realestate.com.au investors nervous because Domain has mentioned here that the property environment has remained challenging with conditions deteriorating since the AGM update. So you could actually stop right there and understand that this is a negative trading update and the share price will decrease when the market sees this. They've also mentioned here that December is experiencing an earlier than usual seasonal decline as agents and vendors defer listings into 2023 calendar year. This trend contrasts with December 21 when listings activity were unusually long, extending into late December. As a result, December month-to-date listings are down around 51% in Sydney and 37% in Melbourne. They've also released financial year 23 first half guidance. They're expecting EBITDA for the first half to be around 48 million. However, they are expecting material improvement in the second half with higher revenue and additional cost benefit savings versus the first half. However, whenever I see management expecting a rebound in the second half of the year, I do get a little bit nervous because they are making some assumptions. And sometimes when management do make that sort of assumption, they will issue a further downgrade when those assumptions don't come to fruition. Now let's have a look at the chart for Domain, and you'll notice in all three charts I'm showing you in today's video, before these companies have released downgrades, the share price is already in a downtrend. Yesterday's video, those two companies I featured, Prenti and MMA Offshore, the share price had been in an uptrend. So in a way, the market is anticipating or expecting either those positive announcements from MMA Offshore and Prenti and these negative announcements from Domain and the other two companies I'll be featuring in this video. So in a way, if you just look at the chart and just listen to the market, you could be expecting these sort of announcements from these companies because the share price of Domain has fallen a significant amount over the past year. In fact, the share price reached a high of $6 way back in October last year. And now the share price is $2.59. So the share price has fallen by more than 50% over the past 14 months. And on the back of this trading update, negative trading update, the share price has dropped a further 9.12% and is almost below the previous low we saw back in June. And if the share price falls below that low, which was around about $2.50, and briefly the share price did fall below $2.50 today, we did see a little bit of buying. And I think the reason we saw buying was because of traders who saw the share price briefly go below that and then rebound. So they took a position expecting that level at $2.50 to be a solid support level. But if we see continuous drops in the share price below $2.50, that would be a bearish signal with the share price falling below that previous low. So this is by far not the worst performing company I'll be showing you in today's video. The next worst performing or best performing company is City Chic, and the hits keep coming for this company. They continually release negative trading updates to the market. The previous one was maybe a month ago, and in this particular trading update, they did look at the last 4 weeks in trading, and it is still negative. I'm not going to look at those particular numbers. I'm just focusing on the first two paragraphs in their trading update in first half financial year 23 outlook, because there's just some negative language in this trading update. And that's all you'll have to see, just negative language to know the share price is going to be absolutely hammered. So conditions since the AGM have continued to be volatile with overall demand below expectations. Those are the two most important words, below expectations. So we already know the numbers are going to be worse than management expected at the AGM, and the market will punish City Chic. So that's all you have to read. You could go on. Globally, year-to-date revenue is down approximately 7% to 157.1 million compared to the previous corresponding period, but up approximately 38% on financial year 21. They do compare their numbers to financial year 21 because they are up on that financial year. But overall, numbers are below expectations, and those are the important words, and that's why the share price was down something like 35%. So let's have a look at the chart for City Chic. And it wasn't down 35%, only down 31.4%, down to 40.5 cents. This particular chart goes back 2 years. And between December 2020 and around about November, December 2021, City Chic was in a really nice uptrend. Share price went all the way to a high of $6.75, or just a little bit above that, which was reached in October last year. Fairly similar than Domain, and then the share price turned down. Sentiment went from being positive to negative for City Chic, and they started to release negative announcements to the market. The first negative announcement was in February of this year around the half-year results, and then they also released negative results in August, and then just a month ago at the AGM, they also released a negative trading update. So the share price has fallen from about $6.75 to 40.5 cents. That horizontal dash line is the COVID-19 lows that City Chic saw. So the share price right now is significantly below the COVID-19 lows. In fact, that low was 70 cents. So we're almost 50% lower than the COVID-19 lows for these companies. So lots of negative sentiment in regards to City Chic right now. They keep releasing negative announcements to the market, negative trading updates, and that's why the share price is significantly down over the past year or even 14 months. And by far, the company that was punished the most by the market on December 20 was BWX. Now, one of the reasons why this company was punished because they were in suspension for about 4 months since the 29th of August 2022 because of irregularities in their financial statements. In fact, they said on the 29th of August they may have to restate their results for financial year 21 and the first half of financial year 22, and I think they definitely had to do that. They're also talking about an impairment of its tangible assets to a level significantly below their carrying value, as previously foreshadowed to the market on the 28th of June 2022. So let's see how the market has punished BWX. But before we have a look at the chart, let's have a look at their trading update that they released alongside the release of their financial statements for financial year 22 and their restatement or restated financial statements for financial year 21. I'm not going to go into BWX's financial year 22 results. They were loss-making by over $300 million because of impairments and that sort of thing. I'm not going to go into the revenue restatement, so you can have a look at this particular announcement. Have a look at how they've restated their revenue for financial year 21. I'm not going to talk about the impairments or the expanded working capital funding, but I'm going to have a look at their financial year 23 outlook and their trading. If you don't know who BWX are, they provide natural beauty products like Sukin, which I think is their most popular product. You can find that in Woolworths and Coles, I believe. Also, Mineral Fusion brands. They've made some really ill-advised acquisitions in the past few years, and that's the reason why they are highly in debt and why they're going through these problems. Now, when you look at their first half financial year 23 trading and the financial year 23 outlook part of their announcement, it does start off pretty good. So there are some bullish signals here. So they are experiencing good in-market demand for the category in Australia and the USA and anticipates improved trading conditions in the second half of financial year 23. So that is a little bit of bullish language there, but I'm always wary when a company's management anticipates conditions to improve in the second half. Sometimes I do think management are a little bit too bullish and a little bit too optimistic about the future. And I have seen this time and time again. When you do see these assumptions made by companies' management, these assumptions sometimes don't come to fruition, and then the company has to release another profit downgrade. So just go through this if you have a chance, go through their trading outlook, and right at the bottom of this particular part, they do or have revised their expectations for revenue and guidance in financial year 23, and they now anticipate revenue to be in the range between 205 and 230 million, and full year EBITDA to be in the range of 25 to 30 million, excluding one-off significant items. So there could be further one-off significant items, more impairments, that sort of thing, which could decrease that full year EBITDA. So have a look at BWX announcement. The market didn't like it. I think the main reason the market didn't like it was because of a lack of, I won't say a lack of trust, but trust has been destroyed in this management. Restated financial statements, the financial year 22 results, a loss of over $300 million for this company was not a good look. So let's have a look at the chart just to see how much the company or the market has punished this company, not only on December 20, but also over the last year. And it has been a disaster story for BWX over the past year. The share price did reach a high in about August, September of last year at around about $6.50. And now the share price is 29.5 cents, down 53.2% on the back of coming out of this suspension. And the market absolutely hate this company right now. A lot of negative sentiment around BWX. But the negative sentiment really started back towards the end of 2021. You can see a massive down day in December. So that was 1 year ago. Share price dropped from about $4.50 down to about $3.75 in 1 day. And then the bad news continued to come during 2022. So again, the market was anticipating BWX releasing bad news because the share price had moved into a downtrend before the company released that negative news in December last year. You can see the share price starting to move down. So the market was aware of this, of these issues in regards to BWX. So sometimes reading or having a look at what the market thinks about a company can be good news for you if you listen to the market. So the share price has fallen a significant amount, increasing volume as well over the past 6 months or so. Massive volume, in fact, in May, in July or June, July, and also when they came out of suspension on December 20, really big volume. That horizontal dash line is not the COVID-19 low. In fact, the COVID-19 low was actually higher than that, around about $2.50 or something like that. That low or that dash line was the lows we saw back in 2018 or 2019, the last time this company experienced some negative sentiment. And that share price or that low was about $1 and about 30 cents or so. And now we are well below that. So there are questions about the long-term viability of this company moving forward, in my opinion. And if this company releases another negative trading update, a profit downgrade, I think there is more room for the share price of BWX to go down from here, because this company does have still a lot of debt on its books. That's all I have for this trading update video, looking at some negative trading updates, some profit downgrades, having a look at a company that had been in suspension for 4 months. They came out of suspension, had to restate their financial year 21 numbers, release their financial year 22 numbers, also release a trading update that wasn't quite as negative as the other two companies. But when the market sees a negative trading update, the share price of those companies will be punished. But sometimes the market can be hinting they are expecting negative trading updates because the share price of all three of these companies was already in a downtrend before they released a trading update. If you have any questions about these three companies or anything else, maybe in regards to profit downgrades, trading updates, I'd love to hear about it. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.